Good morning, good morning, good morning. Currently 8 in the morning Pacific Standard Time here in California. You know, things are weird, right? Market's a little weird. Friday we had a bit of a bounce. Over the weekend, we've got a tropical storm here in California, everyone running for cover. Nothing more than a little bit of drizzle. However, in my area we did, have a little bit of an earthquake. So those of you guys who are not in California, never experienced an earthquake, they can be a little weird, the first time that you experience them. But again, it is what it is. Just kind of wanted to get on here and go over some levels. Traded with the team this morning, and we had some pretty good trades, right? So the trades that we took Tesla, we played Nvidia, and we had someone else play Spy as well as CrowdStrike. So not too bad. What I'm currently looking at here is the ES. So ES put in a little bit of a pop over last week's highs, tried to consolidate here off the open, never really could confirm, but now we're coming back into this demand zone. Now, if the ES really starts taking out 43.83, there would be a little bit of a short position there, and there's the confirmation. I just kind of alerted my guys in Discord now. Prior to this live stream. So again, if you're new to the live stream, if you're new to my style of trading, welcome. Let's see if we can get something going here for the rest of the day. Again, my personal trades that I took this morning, just to kind of get into it, was Nvidia for $570. So I played the 445 calls. And then I also played Tesla. So I played Tesla 222.50 calls. And then I took a little bit of a scalp on 225 puts. So that's what I played today on Tesla. So again, not too bad, especially when you can manage to make some profits, 30 minutes an hour off the open. It's always a good day to kind of just hang it up right now. So what I'm going to be doing is doing a little bit of chart watching, and I'm going to be marking out some levels for the rest of my Evolution Traders team, and kind of seeing what this market wants to do. So we just kind of reflect on what happened Friday. We had that little bit of a dead cat bounce, right? Followed by a little bit of continuation today as well off the open. However, now we're starting to stall out and push back down. So we need to really keep an eye. 43.50s is the ultimate level to the downside that I would be watching on the ES. Again, if we start to break through 43.50s, we could be in a little bit bigger trouble here for the overall markets as a whole. If we kind of shift over to the NQ side of things, which is predominantly the stocks that I'm going to be trading, are going to be located in the NQ. So what I'm looking at here, I can kind of finish marking out my supply and demand zones. I would expect this supply zone that I'm actually drawing here to be correlating with the 200-day moving average on a 1-hour time frame. If not by the end of day, right? So we're going to see this continue to decline as long as price action stays down there. And this supply zone that I'm drawing here is actually going to match up perfectly with that 200 SMA. And we can kind of see how that plays out as well, because it's going to remain on my chart. If I kind of quickly go over to the daily time frame here on the NQ and kind of see exactly what's going on, you can see that reversal bounce that we had on Friday. So as long as the market doesn't lose the 14,600 area, we could expect a little bit of a continuation on this bounce. But again, all bets are off as soon as we lose the 14.6 area. If I kind of zoom out just a little bit more, just to kind of give me a little bit more context here, what I would be looking at here and really trying to focus on is going all the way back to May, right? So if we kind of look at May, and even in the early parts of June, what I want to look at is you can see multiple days here back in, the end of May and June, where this level was acting as resistance, right? So if we kind of look to like June the 2nd, we look at the highs on June the 5th, the 6th, as well as the 7th, and as well as the 9th, you can see this area was acting as some resistance before we gapped over, right? So If you notice on June the 12th, we gapped over this area of resistance and kind of put in a high, back tested, right, this whole zone, and then continued to run. So what I'm actually looking at currently is we came down back into this range. So if I was to draw a demand zone here, right, so, you know, just from the gap down to at least touching multiple points here back in May and June, and I kind of drag this across, we're going to see that this looks pretty good for the market to have that bounce that we had on Friday, right? So anytime that we get a bounce off of a previous area of resistance that is now looking to form as a new area of support, we have to respect that level. So what I will be looking for would be something like this. If the market continues to bounce, would be something like this up into this range of this declining 20-day moving average, which is sitting at around 15.3. Then I would look for some type of consolidation. And if we don't break through, put in a high back test for continuation to the upside, then what I would be looking for in this particular situation is to stall out around the 15.3s, which is also going to be in this area, which is also going to be in these highs, and then look for maybe a nice little kind of blow off top or something where, you know, price action gets stuffed, and then that reversal back down to the downside is what you would ultimately be looking to play back down into this current demand zone that we're trying to hold as of now. And if that area doesn't hold, well then, you know, I would be looking for something like this, right? Rejection up here again, like as noted, the 20 SMA, as well as price action here back in June, right? And then I would be looking for this type of move to come back into this zone that where we put in the low on Friday, and then look for a little bit of a dead cat bounce with a 50%, you know, sort of bounce, retracement, whatever you want to call it, and then an ultimate flush through the lows here. And I don't think you guys could see that because it kind of went off screen, but let me kind of adjust this screen here so we can make this very, very clear. So again, you know, if we do get a continued bounce and then we get a follow through where we get rejected and come back down into this demand zone, I would play the rejection back down, right, on the names that you're looking to play. And then if we do come crashing through here, I would look for a new low to be set, followed by a bounce to get rejected back in this zone for more continuation. You know, ultimately 13,000. 13,200 would be the ultimate spot. That's going to be this rising 200-day moving average. Now, again, I would say, you know, if you are a swing trader, you're an investor, that would ultimately be the spot where you want to buy. You know, the last thing you want to do is start loading up in this zone here, have a 1 or 2 day rally in order for it to fail and then come crashing through this zone. That's not what you want to see. So again, you know, just kind of keep it in mind. But what I do want to point out here, what I want to point out on the smaller time frame, for example, right? If you go down to the 1 hour, okay, look at the zone. This is actually too fucking bright, too bright. So what we're gonna do is make this a little bit darker. What I want to note here is if you kind of go back to last week on Thursday where we put in this high, right? So if going back to last week on Thursday, what we're looking at is the NQ, just for anyone who's joining. We're looking at the NASDAQ. So on Thursday, we kind of put in this high after this little bit of a drop here on Wednesday. So you can see Wednesday's price action was here. We put in a little bit of a drop. We consolidate in the after hours and overnight session. Then we put in this high, right? So you can see here, ultimately, these 2 hour candles that we're holding, we got that washout, right? That washout takes out these previous 2 candles, consolidates, we push back up into this range. Ultimately we're rejected. Okay, so once we start to lose this range again, we come down here, we need to find a new home, right? Meaning new demand zone, which was located on Friday at around 14,600 area. Now we've made the push out. So what I'm looking for in this particular situation here is if we do break out, put in this high like we did, I'm looking for the pullback. And if we do hold this demand zone and start to come out of it, you're going to want to start to get long again on the come out, right? So this is just a break, retest, consolidate, and then we want to come out of this zone, and you ultimately want to play to the long side once we come out of the zone after the retest. Last thing I want to do is go long now and start getting trapped on the way down. And the last thing you want to do is, come into this with the mindset of shorting with anticipation that if we do lose this area, we're just going to automatically break down, because that might not happen. A lot of times, people feel like the market's, oh, well, this is just a dead cat bounce. We're overextended. We're coming all the way back down here. And then only to see that we never make it, right? We never actually break through the 14,600s, and we do something like this and then start to push out higher again. That's how you end up getting trapped. So how you can play this, I would definitely treat this as a scalping environment. Again, treat it as a scalp environment, just due to the fact that we're still stuck between a rock and a hard place here. So, we're right in the middle of this support. We're right underneath this resistance. What I would ultimately be looking for here is if the hour candles can confirm this opening range candle, right? That's also going to be taking out the 20 SMA on the 1 hour time frame. And what you need to kind of note when you're looking at that is the fact that I've got some people posting gains here in the evolution discord. So Andre made a little coffee money on shorting Apple right now. Congratulations. What we're looking at here is if we do start to take out the lows here, 14,793, it's also losing the 20 period moving average. We've got room to scalp that into the top of this demand. So between 14,795 and let's call it 14,734, there's a little bit of a gap here where potentially we can make money. So that gap is going to be here. And what you want to do is on the way down, you want to be selling for profits, right? We're not going to expect that we're coming to the bottom of the range. We're not going to expect that we're going to break down. There'll be other setups, but the setup that we would be looking for is a confirmation of the opening candles lows, okay? So that would be here. If I could just draw that line, which also correlating with the 20 SMA. So again, I don't really need to draw the line. I can see here, my eyes are decent enough, right? My eyes are decent enough to see that if we start to lose this 20 SMA on a 1 hour time frame, we've got potential to come down into this demand zone where we kind of held previously on Sunday last night, right? So that's what I'm essentially looking for here on the overall markets if you are a futures trader. Now, if you are not a futures trader and you're an options player, one thing that you're going to kind of want to correlate this analysis with is how you're going to play some of the stocks that you play, right? So for example, if the NQ does start to lose this hourly 20 SMA and starts working its way back into demand, we can look for things like, even though there's earnings this week, again, prices are a little juiced, but look at things like Nvidia, right? So Nvidia had an amazing push in the pre-market, an amazing push that a lot of the guys in Evolution Traders took this morning, and had much success. The level that I put in here on Nvidia in the morning was 425.25, right? 425.25 long. Why? Because look at the pre-market highs here. We're trading over the 200 and the 20. All we need is a confirmation. We literally get that within the first 5 minutes, and it was an easy, to say the least, an easy trade, right? See the setup, let it confirm, take the move, right? I would have loved to say and tell everyone, I rode this up to $453. I didn't, right? I never catch the whole move. I'm never looking for the whole move, right? So if I pull up the 5 minute time frame, let me show you guys exactly what I'm looking at. I'm looking at the pre-market highs. I'm noticing that we're over the 20 and over the 200, very, very clear here. I'm taking the opening range candle, right? So the opening range candle here at 6:30 in the morning takes out this level. I'm going to go ahead and get long. Runs all the way up to 448. Let this candle close, and if we can start to push higher, I'm going to sell on the second candle, right? 9 times out of 10 when I'm playing, these type of plays, that's exactly what I'm doing. My stop loss will be, either a close below the 20 SMA or a close under my 1 bar stop, which would have been there. So that's a hard stop for me. And then, just essentially you just write it. So, look to make $2-3 on the move, get out of it. If it consolidates, go ahead and take it from there. But if we're looking now, for example, going back to the analysis on the NQ futures, if they start to break down, what I would look for here on Nvidia as these highs that we put in today to act as the high of day, right? What you would need to see, and there was already a little bit of a trade setup here below 450.40s, dropped all the way down to 448.70s. So this is a $2 move. Even though it's getting sucked back up right now, how you approach this is like this, right? If you're looking at this move and you're looking to short this move, what you need to see is an hour candle break a previous hour candle's low, and you're going to scalp that move and you're going to look to take a 1R. What does that mean? If Nvidia's average true range is trading between $1, $1.50, $1.80, if we can make $1, $1.25, $1.50, we've got to be out of the position. Hold a runner if you want, use break even as a stop, but if you get that $1, $1.50, $2 push, very, very quickly treat it as a scalp, get your profits, and just get the hell out of the trade. That's what you would be looking for. So ultimately, you know, the bigger level that we would be looking for here going forward is for Nvidia to lose 448.78, and we want to play that into 445. Okay, so that's what we would be looking for ultimately. If the market wants to continue to push higher today and we're just, you know, merely consolidating right now, 455.88 to the top side would be your next breakout. But again, be very, very careful. There's earnings this week on Nvidia. Nvidia is already up 4.5%. It's trading up $18 on the day. So do you really want to be going long here above 455 with the stock being up $18? Right? Think about it. If you missed the move, you missed the move. It's okay. There's going to be another move. So never, you know, I'm more comfortable taking this breakout over pre-market highs and jumping off the first floor than jumping off the 18th floor, right? You know, I mean, I might sprain my ankle jumping out of a two-story building, but I might break my fucking neck if I jump out of a building 18 floors higher, right? So that's the way I kind of look at it. You know, again, you know, it's not to say that Nvidia doesn't push up, you know, another $2, $3, $4, $5 on a day, but it's very, very risky. So let's take a look at Tesla, right? So if I'm looking at Tesla as well, Tesla had another setup here. Off the open, right? Just to kind of recap this, look at Tesla over pre-market highs, that 223.25 area. Confirms off the bell, first hour candle puts in that high all the way up to 228. So again, another really, really good move here. And in the thought process on these plays is this, right? The market has been selling off, right? Or on a pullback, right? Or a back test, whatever you want to call it. Market's been on a little bit of a decline. So when you get these setups where we're kind of basing out and creating a floor, look to those pre-market high levels. And if we're able to take those out, do we have some space? Even though we're trading below the 200 SMA, look at the gap between the 200 and the 20. I love when I see these gaps like this. The farther away this 20 period moving average gets from the 200, it creates a bit of a gap, right? So if you see Tesla off the open here, confirming the pre-market highs, has room to stretch. Now, it doesn't mean that it has to go to 239, but what I'm saying is if there's $2, $3, $4 in the move, there's definitely enough area of opportunity for us to get in on a confirmation off the open and sell on the initial 30 minutes off the open, because that's going to be when the first hour candle closes. So again, that's the way to kind of think about it. Right now, you can see that Tesla is starting to pull back. And right now we're starting to confirm the previous hour's lows of 225.50 and currently trading at 224.90. So there's about a 60-cent drop there. Again, if someone is taking that position short, you're going to want to look for that quick dollar on Tesla. And if you can get it 75 cents, $1, $1.25, just take your profits, because again, you are over your supports here and your support system is rising. Now, that doesn't mean that it's not going to pull all the way back. Again, your ultimate kind of back testing area where you would be looking for would be 223, right? And why is it 223? Because that's our original breakout from this morning. I just went over the long setup over the pre-market highs. So what I would be looking for here in this particular situation, if someone theoretically was sitting short, would be a pullback into the pre-market highs for a little bit of a break and retest, consolidate for the next push higher, right? And ultimately looking for that 239, right? So that's essentially what you're looking for in this particular situation. Now, again, it doesn't have to happen, but as you see the price action start to play out and you start to go through these hypothetical situations, it allows you to gain confidence when these moves are playing out live, right? So if that's the thought process and you are short, understand that you're trying to take profits here at the pre-market highs. So you're looking for that $1, $1.50, you want to lock in your profits. And then ultimately, what would you be looking for? You would be looking for the stand and then you would be looking for the push higher. In order to play that back long, you're going to need a green candle to take out a previous red candle, and that's when you're going to get long, and you simply target the high of day. And if you take out the high of day, you leave a runner for potentially letting this run all the way into 239. That's just the way you play it. So again, you always want to have two sides to the story marked out in your heads. And what that means is you want to have a short idea, you want to have a long idea. You don't have to get fixated on going one particular direction. All you need to do is just understand that if we do break a certain level, or if we do confirm a certain level, there's money and there's room in the trade for us to take it. That's all you're looking for, okay? That's all you're looking for on that particular situation. So we can just keep going down the names here. Andre took that Apple short, so we can kind of see exactly what's going on. These are just some lines I drew out from last week's live stream here. We notice we pulled back into this support, and I kind of marked out this trend line saying that, if we hold this trend line, we could potentially keep on bouncing into, maybe 176, 177 area, consolidating sideways and then falling back down. Again, we're going to have to see how that exactly plays out. But what I want to look for here, if we pull up the 5-minute time frame, because Andre was going to treat this as a scalp, right? Look at the push that we made off the open here, right? So we get above, right? We get above this supply zone. However, look at this candle is one thing that I want you guys to focus on. Look at this candle here, right? Anytime you start to see these type of candlesticks when you're underneath levels of supply, or right at a pre-market area level, or right at a previous day's level, what you want to start looking at, okay? What you want to start looking at is these reversal type candlesticks, right? You can see at one point in time that this candle was green, and all of a sudden it starts to get sold off. And when it starts to get sold off, light bulbs got to start going off in your head. Maybe to where you're starting to analyze this and you say, well, if I use this as a high and this candle gets confirmed and we lose the 20 period moving average on a 5-minute time frame, I'm interested in taking this short. Your short entry would have been here on this particular candle. You're going to take this down into what, guys? Into the rising support here, which is a 200-day moving average. Now, again, if you didn't take this aggressive entry here below this inverse hammer candle, entry would have been 175.19. You're looking to take your profits into 174.50s, 174.60s. What you can also look at here is this candle does close below the 20 SMA. However, it is sitting on the 200. So what you would essentially be looking for is a confirmation breaking below the 200 period moving average. That's going to happen here at 7:20 in the morning. You can see that this candle here that I'm going over, this candle takes out all of the opening range price action and starts to actually get below the low of day, right? So as you see this candle start to break through, you can take an entry short here at around 174.50s. And again, being that this is Apple, it's not Nvidia, it's not Tesla, we're not looking for $2, $3, $4. We're looking for 50 cents, 80 cents, $1. Those are good areas to take profits on a stock like Apple. Again, understand the instrument that you're trading and how much these things can actually move. Apple's ATR on a 5-minute time frame is like 20, 30 cents max, right? So if you can get 50, 60, 90 cents off this thing, that's a hell of a trade. So if we kind of just play this scenario out here, the 174.50s drops all the way down to around 173.90s. So again, that's around 50, 60 cents. So that's automatically a 2R on your initial investment. Because why? What is your stop? You're going to use a 1-bar stop, right? So if this is going to be your entry candle, you've got to use either the previous 5-minute candle high or your current candle's high as a stop. So your stop loss would have been something around 174.79, which you're risking about 20 cents on the overall trade. And you're looking for the confirmation below the 20 SMA and the low of day. Obviously, this is your entry candle and you're taking it on the first push down. Now, again, these break and retest are something that you guys need to start identifying, right? So if you notice here, this candle starts breaking down the 200, right? Puts in a new low. What does it do? It back tests the what? The 200. So a break to a new low, back test. A second entry could have been taken here on these red candles, or even, when you see that we don't close over the 200 SMA for the new low. Okay. So just as pointed out before on this candle, right? What is that candle, guys? It's an inverse hammer candle. What is this candle here? A hammer candle, right? So if this is kind of an indicator telling us, there could be a short-term change in trend, right? Okay. What could this candle potentially be telling us? That potentially there's a short-term change in trend. What would we use if we were going to bounce this move? We would definitely use the low wick of this hammer candle. So again, someone that identifies that, and you already know this, and you've already played this out in your head mentally, and you've already taken thousands of these trades, what would you be looking for? What you would be looking for is a green candle to take out a previous red candle. So if this is our high here, this would currently be our entry candle. Now, again, if you're watching this stream for the first time and you're barely setting your feet, that doesn't mean go run out and start buying calls, okay? What we want to be able to do is identify this before I tell you, right? I don't want to be the person to bring something to your attention for the very first time when you've never traded these particular situations. But I want to bring attention to starting to identify these moves on your own. We have to be self-sufficient traders. We have to analyze the price action and the stocks and the patterns in real time. And we need to be able to process this fucking information quickly on our own. Okay, on our own. So for example, when you start to see these particular situations like this, you know that you can take a short position here on this candle. You know you can take or add to your position short on this candle, and you're going to take on the next push down, which is a new low of day. And if you miss that move altogether, well, then you know that we just broke down the 20 SMA. If we do reject, or excuse me, the 200, if we do start to reject the 200 SMA, we can take red candle taking out green here and take it for profits on the next new low. So again, as soon as you start to identify this on your own, it becomes second nature, because you start watching candlesticks and you start watching price action and you start identifying potential setups. And all of these potential setups have very, very low risk. What is your low risk on this? 1 bar stop, high of day. Okay, if this decides to fail, takes you out, then you get stopped off here, right? Again, all of these, right? What is your stop loss on this potential short? It's here, okay? What is your potential stop on the bounce? It's here, right? So again, taking small risk trades, but with good technical analysis and a good technical outlook on how we can particularly play these moves. So I'm in the Discord right now. I'm looking currently around at some things, guys, so just give me a second here. Tesla looking good for a scalp on the downside. Yeah, so we've got guys looking at Tesla playing Tesla in and out today, both long and short, right? So what are we looking at here on Tesla, right? I gave you guys a setup off the open. The first 5-minute play was absolutely beautiful. This never even gave you a reason to get out of the play here. You know, if you just look at taking out the pre-market highs, you know, that 222.5, 223 area, it kind of runs all the way up to 224. And, you know, long story short, test 229. However, we're pulling back now into the 5-minute 20 SMA. As soon as we lost the 5-minute 20 SMA, you can do one of two things, right? You can do something like this. We lose the 5-minute 20 SMA. This becomes your entry candle here short. Your 1 bar stop becomes there. If we do start to close over that 20 SMA, you're going to get out, and then you're just going to look for the profits on the downside. Again, understand you're going against the trend. So right now we had a big pop, put in the high. All we're doing is back testing this area, consolidating sideways for the next pop. Now, if we do start to lose the bottom of this formation here, that would be a break, retest, consolidate, fail, and we would be looking for the move back down to the downside. So that's how you start analyzing these in real time. But we do have guys that are sitting short in this move. Now, again, you know, there's aggressive entries that you could be taking short. For example, if we understand that this is high of day, we can see that this is consolidation here. You can use this breakdown as a short spot. So that breakdown of the short spot here is going to be around a price of 227. We've dropped all the way to 224. So that you're looking at a $3 decline there, where you could have potentially, yes, it's very, very choppy, but it's just kind of slowly grinding lower, right? So that's how you identify that move. Again, you know, how do you identify this move? How do you know that this is going to pull down? You analyze the chart, guys. It's in front of your face. The high of day here is sitting at 229, 230. You can see that this candle, and this candle are consolidating sideways, right? They're consolidating sideways. This is your low breakdown. So if this candle pulls back and this candle pulls back, What happens here? We start to break through this consolidation, right? This little bit of a flag pattern, this little bit of a holding pattern up here. Now we're starting to break down. What do we understand? Our potential is the 20-day moving average. That's our support. So we could take this short position here and cover into this rising 20-period moving average. Now, one thing that I want to point out to everyone now is this 20-period moving average is getting extended from the 200. So anytime we start to get that big gap, we have to start looking for that gap to start getting closed. What I would be looking for here is see if this consolidation, if this range is going to hold, right? So this range, what you would be looking for is a breakout over, pull back and hold, and then we would be going long coming out. Or what you would be looking for is this to break down, get back tested, reject, and then come down further. Where would your entry be? Your entry would be on the rejection spots, right? On the rejection spots to start playing it back down. So there's a lot of ways to play, these charts. There's no one particular setup, one particular strategy, one particular quote unquote concept, right? It's all about having your indicators or your edge or your strategy or being able to read the price action and make educated bets based on your analysis and your edge, and actually trusting the chart patterns to play out, but protecting your downside by having those technical stops, right? That's all we're doing here. We are, like I've said this before, we're not doing brain surgery, guys. This is not, we're not doing open heart surgery. We're not saving lives here. We're sitting behind a computer screen, some of us on our fucking phones, and we're clicking buttons on buy and sell, right? Based on what's going on with this very, very old school computer game that's sitting in front of us, right? So it's not hard to do. What's hard is handling the fear and the emotions and the anxiety and, everything that comes along with getting into the trades. That's the hard part, okay? But, identifying these moves and learning how to read the price action is very, very easy. From there, it's all about having to manage our emotions, right? I'd love to know what some of you guys traded today. Did we actually trade, or are we just chart warriors? What's going on, guys? We don't want to be chart warriors. Remember that. We don't want to be someone who's battling the charts each and every single day and not taking any trades. We want to be taking trades. That's the only way that you learn. It's the only way that you learn, guys. By taking trades, understanding what you did wrong, working through the mistakes that you're making. Currently back on the NQ chart here. So what I'm looking at is, the big pop off the bell. This was a level that I was looking for, and let the guys know this morning in Evolution Traders, looking for the breakout here over this consolidation, right? If we look at this range here, this range is what I'm talking about. If we get the breakout over that, this would be your entry, okay? That would have been your entry, and then obviously that we've pulled back to this entry. We didn't hold it. Now we've broken down the 20 SMA and on our way down to the 200. So with this in mind, right? If you pull up an hour candle, pull up the hour candles, look how we're coming close into this previous supply zone here, right? I'm watching this 200 period moving average. I'd like to see this get into my box here to validate my own thought process. I'm still looking for the 14,793 short here on the NQ futures to pull back into this demand. That's ultimately what I'm looking for. Pulling up Amazon here, looking at the Amazon 1 hour time frame. Amazon has confirmed, look at this setup here, guys. So you have the pop off the open, you have the reversal sitting at the 20 period moving average. We're trading below the 200, okay? This candle is confirming the previous 2 hour candles lows. People should be sitting short. So this is what I try to teach to start identifying, is look at the hour candles. If we can start to confirm previous hour candles lows, we need to be sitting short. Take it for a little bit of a ride. What's our potential? It's going to be either Friday's lows, which is going to be somewhere in this range, or the overnight session lows, which we're currently starting to break down now. So if you kind of just look at the move here and see, how much money you would be making at this particular time, it's not a lot. We're looking at Amazon. It's $100 stock essentially, but entries somewhere around 133.40s. and we're currently trading down at 132.90. So about 50-cent decline here on this potential move, and that's exactly what you would be looking to start either taking half size off, you know, so forth and so forth, right? Again, look at the 20 SMA setup here. The 20 SMA gets confirmed to the short side. Yes, we do have support here at the 200. However, if you do take this setup, you're using a 1-bar stop. Again, if this is your guys' like first time watching me and you guys don't really know what a 1-bar stop is, if this is the reason why I'm taking the trade, this candle here, 1-bar stop is fucking here, right? It's not hard. I'm not going to lose more than this 1 bar. I don't care. You know, that's my stop. That's my pivot. This is my entry. I have to sit through the consolidation, but look at what happens once you break. Boom. This is a perfect A+ setup. A+ setup. You get your breakdown, get your pivot, get your confirmation, get your consolidation, and then you get your flush. So you'd be taking profits on this move down here. Looking at Meta currently. You know, maybe Meta has some room below 285 down into 282. Gonna have to keep that on watch, the 285. It's kind of just treading sideways. Taking a look at AMD next. AMD got its hourly pullback into its rising 20-day moving average. So again, your bounce spot is into rising hourly support. However, if we do start to close below 105.50, you would be looking for a short position. Is there any tickers that you guys want to see personally brought up? Do some analysis on them, do some levels. Again, remember, we're also coming into New York lunch hour here, so things can get a little bit choppy as well. Price action can start to slow down a little bit. Coming back over to the ES chart, the short setup that I was looking for and called out here, the break below previous hours lows, the 43.82, currently trading at 43.75. So again, just to kind of show you guys, you know, what I'm looking for the team here in Evolution Traders is something like this, right? So what I'm looking for, if I bring this up here, hopefully you guys can see this. You know, today at 8:06, so about 40 minutes ago, ES 43.83 short. If confirms last hour's lows is a short. So far, we have bounced out of demand and now backtesting. Bulls need to hold move for continued upside. So I post a chart here. You know, the 43.83 is a short if it confirms, right? So what happens to the 43.83? It gets confirmed here on this candle, right? So it's going to get confirmed on this candle here, and you're going to take your short position. You're going to take this back into demand. Now, again, you're going to be selling on the way down. ES is not going to move like the NQ, guys. So if you're getting, you know, 5 handles, 6 handles, 7 handles, 10 handles, take your profits on the way down. Understand the instrument that you're playing. But as of now, from the 43.83, we're currently trading at 43.75. So you're looking at an 8-point drop here on the ES. Perfect spot to take profits at that. You know, if you took that correct entry. Again, taking the entry is not hard. It's not hard. It comes down to a matter of you identify the level that you needed to take. I clearly drew this out, you know, for everyone so you guys can see it. You know, that's why when I want to bring attention to the name, right? Bring attention to the level, and then it's up to you just to sit and wait for that potential level, but not just take my advice, right? I don't want you guys taking trades blindly. What you need to do is analyze what I'm looking at and see if you can understand it. Can you understand why I'm saying that? If that makes sense to you, right? If that technical analysis that I'm putting out there makes sense to you, and you see the play confirm, then take the trade, right? You don't have to take the trade on the hourly candle. You can definitely set a price level line like this, right? You could do something like this. and then you can go to a 5-minute time frame. $43.83 is this dotted line here. So look at the breakout. Look at the breakout. These patterns repeat themselves, guys. It's like they repeat themselves. And some of you guys should already know what I'm talking about. If we're looking to get in at 43.83, right, which is this dotted line, if we're looking to get in there, this is our entry candle. What's our stop, right? What's our stop? Can someone in the chat, there's not a lot of people in here, there's a handful of you guys. If this is our entry candle on the breakdown below 43.83, can someone just, I don't need you guys to give me the price, but can someone just tell me what would be our stop? If that's our entry candle, what is our stop? I'm not even going to continue until someone at least says something, right? There's no sense in just sitting here watching, listening if you're not going to actually learn, right? And this is not to be hard. It's not to be a dick, but a lot of times traders, thank you, Mr. Putz, top of the reason why candle. Very, very simple, right? So again, if our stop loss is here, right? If our stop loss is here, what is to be fearful of? What's to be scared of? Nothing, right? Nothing. The only reason that people get fearful or scared or hesitant to take these trades is because they're in fear of losing money. It might not work. And what if it doesn't go down, this, that, and the other? Guys, nobody has a perfect entry. There's never going to be a perfect setup. There's never going to be a trade, strategy that works 100% of the time. But we're protected. You're going to stay in the game if you protect yourself. So protect yourself. The level is there, 43.83. We take this confirmation candle. This is our reason why candle. We get into the breakdown of this. And even if this comes back, it has to close over our 1-bar stop, over our reason why candle. It's got to close over that, right? In order for us to even get out. So we can't even think about getting out, for 5 minutes, right? If we're watching a 5-minute time frame, we can't even think about getting out sooner than 5 minutes. Why? Because we would need a 5-minute candle close over our reason why. So how can we get out, prior to 5 minutes? Sometimes, traders get into these trades, right, where you jump in here and it starts to bounce and you get hesitant and scared and you start selling out only to see that it gets rejected and falls back down. But going back to what I'm saying here, how these patterns repeat themselves. If this is the short level we're looking to get in on and we get in here, look at the breakdown, look at the retest, right? How many times do I have to say it? Break, retest, gets rejected at what level? The 43.83. If you missed it, you can also take an entry back here at the rejection of the 43.83 for the next push down lower, right? And then you would be taking profits on this run here. I hope that makes sense to everyone. Again, does this move have to continue to come down? Of course not, right? Of course not. What we need to have happen is, identify our move, set a stop loss, take profits 5, 6, 7, 8 handles down, 10 handles down, especially on the ES, 43.83 to lows of 43.72. So you got 11 points, 11 handles off this move. And it took 5, 10, 15, 20, 25, 30, 35, 40 minutes. 40-minute trade for 11 handles on the ES. Not bad, right? Even if you're playing one mini contract, you took 11 handles, it's not bad. I mean, that's, the great move, right? Even if you're playing micros and you took 2, 3, 4 micros, it's a good move. It's a good move because essentially your risk was only, right? Your risk was 43. Well, we're getting into 43.83. Your risk was only 2.5 points, 3 points. So we risked 2-3 points on this potential short to make 11 points. I would say that's a 3R, almost 3.5R, 4R. That's a hell of a move. If we're risking 2 or 3 points, the potential upside on that was huge. It's very, very good. So that's exactly what I'm looking for. And again, so some of you guys who may be watching this live stream that are in evolution traders and you guys are just hanging out here with me, that's how you analyze the analysis, right? So going back to the analysis, the original analysis on the ES, ES 43.83 short. Whoops, you guys can't see that. 43.83 short, right, at 806. So if you're looking at that at 8:06, right? I posted that here on this candle. Why am I posting it here? Because I'm looking at the floor being created. I'm looking at the lows here, 43.83. 4 minutes later, after posting that, it breaks through the level. Again, a lot of the trades that I'm posting, a lot of the analysis that I'm doing in real time. I'm in real time. We're continuing to push lower here on the ES 43.7240s, but a lot of this stuff is in real time. So, you know, as you're looking at it, quickly go to the chart, do your own analysis, and kind of see if you can identify what I'm talking about. If you can, and you can take that trade, well then, you know, take the trade. But first things first is I want you guys to be able to understand why, right? We have to understand why we're taking these trades. Never blindly take trades from anyone, guys. I don't care how good of a trader you think they are. I don't care, you know, what profits they post on Twitter or whatever. I don't care if they made 5,000% on their last trade. Never blindly take trades from people. It's the most stupidest thing that you can do. And you can definitely learn from people. That's completely different. You can trade with guys, right? That's completely different. That's why I built the room, is so guys can trade together, right? You can bounce ideas off your head. Say, for example, someone said, you know, well, I'm looking to get long here off 43.83, and now it's broken through. Someone can call that other trader out on their bullshit. Why are you sitting long when we've put in a new low of day? Is that the smartest thing to do? Probably not. Then it might make you think maybe I am making a stupid mistake here, right? Maybe I should get out of this move, right? Someone can tell you, hey, you're below the 20, you're below your 200, you know, trend is now trending downwards. We've broken through, made a new low of day. I don't think this is a very good spot to bounce, you know, right? Like we've just put in a new low here. We're in an area of demand, yes, but this is a wide area of demand that's been holding up on the daily chart for a couple of months now. So again, you know, this range is going to be huge. Where is this actually going to stop? We're going to need to at least see it stop somewhere, come out of the range, come and back test it and hold it before we can start to go long. So, you know, your clear play was the short here on the breakdown. We've got the NQ looking at here on the 5-minute time frame, pulled back into its pretty flat 200, right? So a pretty flat 200 here. If I look at the hourly chart, again, you know, we've kind of cracked the day's lows here. We've cracked that 20 SMA, and it's aggressively getting bought up here. What we would need to see is the 14,787 level get confirmed. You can see the crack through here, right? So we crack through that 200 SMA and it immediately gets sucked back up. One thing that I do want to look at here, because again, this price action stuck between a rock and a hard place. We're stuck between a declining 20 SMA and a very, very flat 200. What I would be looking for would be this short position here. Okay, the short position I would be looking for would be this 14,788, right? We've broken the 200. Okay, we've broken 200. We're back testing. We need to stay below the 20. And then if we start to fall through again, the 14,788, we've got to take the short position. Now, again, use a 1-bar stop, use a 20 or the 200 SMA close over as a hard stop, but look for that short position there. Just protect your risk to the upside. Again, if we're just going to hold this whole zone here and start to come out of it, we're going to need to get a close over the 20 SMA, and we're going to need to break over this area here, right? These two candles. And that level would be something like this, right? That level would be 14,835 to the upside. So again, you're stuck in a very, very tight range here. And even over 14,835, you've got room to around 14,850s. That's a 20-point little gap there. But again, look at the price action previously that was traded in this range. Very, very choppy. So if we get a breakthrough, look for a break under, a break over, a break under. Again, very, very choppy. Very, very choppy. So yes, there might be a potential long here over 14,835. But again, anticipate choppiness. Anticipate taking profits if you have them. Look for the short position below 14,788. Does it mean we have to flush all the way through? Of course not. But again, it's worth a shot below 14,788, right? Look at the gap that we have. It's worth a fucking shot. And that's all this game is about. Analyzing the price action and taking your shots and just making sure you protect yourself. I'll leave this up on the screen just so we can kind of see how exactly this is going to play out. But, you know, again, coming into the lunch hour here, I'm not expecting much. What you would be looking for in these particular situations, if we do break the 14,788, it might only go down 3, 4, 5 points, right? And then try to come back and immediately backtest that. It's on those breakdowns like this that people get a little bit scared, and then they sell out. Just make sure you're using a 1-bar stop or a close over the 200 SMA. Did anyone in here take any trades today? Pre-market break above 43.96 is and closed at 44.05. Beautiful trade. Beautiful trade. That's what it's all about. Beautiful trade. Let's see that. Let's see that move. Yeah, the 43.96, perfect. Had that marked out on the charts as well this morning. So the 43.96, right? That's what you said. Yeah, 43.96. So entry candle was here. Yes, we did have a little bit of supply here. We are trading over the 200 though, so we do have a little bit of firm support that we showed. We get that first push into 4,400 and you sold at 44.05. So you sold on the way up here. Perfect. That's a beautiful trade. Sold into this this area here. That's beautiful. Beautiful trade. Beautiful trade. Mr. Bobby, beautiful trade. And that's what it's all about, you know, being able to identify those moves, pushing your chips to the table, assessing your risk, you know, having confidence, having the balls, right? Having the balls to trust your analysis, and the confidence is key. That's it. That's all you can do. Whatever the candles do after you're in it, you have no control over. What you have control over is your analysis. What you have control over is watching the charts. What you have control over is stopping out when you're supposed to stop out and admitting that you're wrong. But yeah, that's what it's about. That's what it's about. This was also a beautiful rejection too. I'm curious to know if anyone took that rejection. This rejection here, high of day as a stop. This whole area was acting as an area of resistance, right? Resistance there. Beautiful play here, back into the 220 and then back into the 200, and then shit, it even confirmed lower than that, but that was also nice. So again here, if you look at the bigger picture, we get the break on the ES below the 200. We get the back test, and now we've got our second low here. So again, another break, retest, and flush. Here's our low of day now. So again, if we continue to bounce up, look for a bounce into 43.81, 43.85, and then for a new low, right? Coming out of that zone, if the market's going to continue. Now, if this downtrend is going to break, we're going to need to get over this area, back test, and then go higher. That's ultimately what we would be looking for. So again, two ways to play it, two ways to analyze it. Both of them are legit. Both of them are valid. It's just now sitting on your hands and actively waiting for one of the areas to play out, whether it's the continuation of the long or whether it's the continuation of the short. Again, someone could use the low of day as a stop, and they could be just sitting in this, looking to play it back into the declining 20 and take your profits on the way up. That's another play as well. You know, like, let's see what your risk was on that trade here. So if low of day of 43.72 is your stop, your entry candle is here at 8:55 in the morning Pacific Standard Time, because why? We have green taking out red. We have a clear stop loss. So 43.72, your entry's 43.76. You got a 4-point risk here, right? You got a 4-point risk on this potential long setup here with the hard stop under that. And we would be looking to take profits into this zone here. That's what you would be looking for on that particular situation. But again, if your hard stops here, and let's say someone is sitting long, and we never really approach this 20 SMA or break over it or start to pull back, if we lose this area here, you're going to have a trader on the opposite side of the trade taking you short, right? So they're going to be playing against you. So again, you know, break, retest, break, retest. Are we going to continue trending down, right? That's what essentially what we're looking for. That's the pattern that we're in. But again, it doesn't mean that we can't play long. So that's what a lot of traders need to identify. Some traders aren't good at playing long. Some traders aren't good at playing short, right? If you're really not a scalper that can play both ways, then even in a downtrend, you can still find setups. You just have to take a little bit smaller size. You have to take profits a lot sooner because of the fact that you're not going to get the continuation. The moves are pushing to the downside, right? The red candles are much bigger than the green, right? The red candles are much bigger than the green. So again, we have to, when we do put in these new lows, when we consolidate or bounce, we have to take the rejection short and try to ride the short moves. Again, if we're taking the bounce, moves are not that big, so just take profits a lot sooner, right? Size down if you have to and take profits sooner if you're only comfortable playing long. You know, so ultimately what I'm looking for here is I want to see what we do when we get to this area. That's what I'm looking for. What else we got going on the stocks side of things? What's Nvidia doing? Big earnings on Wednesday on Nvidia. Nvidia essentially just flagging in this area here. Back over its 20 SMA. What I don't like about Nvidia is that the 20 is super extended, right? The 20 SMA is so far extended from the 200. It's up $20 on the day. So yeah, even though we are trading in a range, this would be considered a flag pattern, you know, looking for the breakout over 455.90 and a backtest and continuation higher. Again, it's so hard to sit here and say that you want to continue to play Nvidia long, being up almost 5% and $20 on the day. A very, very tough play. Again, premiums are absolutely juiced out of their mind. Like I had to play 30%, 35% size, right? Normally I'm playing 10 contracts on Nvidia, and today I only played 4. The contracts were juiced up around $1,800 a pop. And I didn't feel comfortable with that much risk. You know, although it was a winning trade and the setup was good, again, you know, that's a lot of risk to put on in one particular trade. especially that early off the bell. So I'm looking at Tesla now. Tesla again with that pop, you know, kind of hovering around this area. You know, we are creating a floor here. What I would be looking for here on Tesla is to see if this short-term 5-minute demand zone holds. That's what I would be looking for. So this is a 5-minute time frame. Again, just trying to see if this holds. If it doesn't hold, what we would be looking for is a short on Tesla through 224.50s. You know, ultimately we have that upper supply zone at the high of day here in this range. And this is how you can kind of just draw your supply and demand zones, right? I'm going to show you guys something in a minute, but so right now we would be looking for rejection spots at 229, 230. We're looking for hold spots at around 224.60 and 225. I'm going to leave this supply and demand zone on there. We've got Hurricane Hillary news being posted up in my Discord here. Hillary destroying over 3,000 emails, all bullshit, right? What do you guys think about that? Anyone see that news headline? Tropical storm Hillary makes landfall, destroying over 3,000 or 30,000 emails. Absolute bullshit, right? Absolute bullshit. I don't think anyone's buying that. A little reason for an excuse here. A little reason for an excuse for just deleting random fucking emails. Like how a storm is going to wipe out, you know, the server for people's emails. Doesn't even fucking sound right. Is anyone else in California? You know, everyone was on and on and on about this, you know, tropical storm, and nothing but a light drizzle, you know. Got guys on my street still. I had kids yesterday in the middle of a fucking supposedly, you know, tropical storm riding their bikes down the street. You know, little drizzle, right? Yeah, some areas got a little flooded, but what was more interesting than the storm was the earthquake that we had. Again, if you're not from California, not too familiar with earthquakes, they're a little trippy. Definitely a little trippy. Oh yeah, but what I was going to show you guys is this is a 5-minute time frame. All I have on here as far as indicators is a 20 SMA and the 200 SMA, and then I'm drawing in my own supply and demand zones. If I pull up my big boy chart, right, aka spaghetti chart that everyone likes to poke fun of, I want to show you guys something here. Why I don't always, you know, because I'm a simple trader. I'm a lazy trader, right? I drew this demand zone out, but do I really need to draw it out when I'm looking at this particular chart, right? I've got a 50 EMA acting as support where we bounced on Tesla. I've got the 50 SMA in the Bollinger Bands here acting as support. So look at my line or my box that I drew. The lows are sitting at 224.50. Look at my 50 SMA on a 5-minute time frame, 224.65. It's the same thing. It's the same thing. So instead of drawing out all these lines, I've already got them. There's a short position here below the 224.50s into 223.25s. That's how I'm figuring out my areas of supply and demand. That's how I'm figuring out my measured potential. We're running into a little bit of short-term resistance here at 227. Why, right? If I didn't have this chart on my screen, I want to show you guys something. If I didn't have that chart on my screen, what would I be looking for essentially here? I would be looking at these top wicks, right? Top wick rejection. I would draw a little bit of a mini resistance level here. I could say that I've got resistance at 224.43. And then, however, if I go to the big boy chart, look at how this is matching up with levels that I've already got on the screen. Okay. Look at where that's matching up with. It's matching up with the Bollinger Band. So, you know, when you're really looking at these charts, sure, if it makes you feel better by drawing your own supply and demand zones, fine. But the way that I trade, I'm going to teach people how to use this big chart, right? I'll teach you how to draw your own supply and demand zones as well, but it's just going to correlate. Now, if we are assessing this 5-minute chart, we can see that over the 227.50s, we've got nothing until we get to this top high of day, right? Well, if we go to an hourly chart, right? If we go to the hourly chart and I pull this up a little bit, I want to show you guys something here. Okay. Look at our top high of day wick here, right? Look at the top high of day wick. Okay. That 229, 230 area. Look at what I've got sitting at 229.16. Got the 100 simple. So again, maybe we push up into 228.25. We're going to have resistance there. We're going to have resistance at 228.50s, and we're going to have resistance at 229. It's matching up the same thing with what I drew on the charts, even if I'm not even looking at it, even if I'm not even looking at this big boy chart, right? If you go to the daily time frame, okay, the daily time frame, what's sitting right at 229? We've got the 100 EMA. You can see it here. Can we see it? Look at that. Look at this little red line. I don't know if you guys can see. You see that little red line? That's what I drew on a 5-minute time frame. Look at the supply zone that we have sitting here. This is why this chart is so fucking important. So for everyone who says you got too many fucking indicators on your chart, how do you read that chart, this, that, and the other? It's the same thing as drawing your own supply and demand zones. It's the same thing. So what would need to happen in Tesla's particular case? Tesla needs to get over 230, and then it's got room where? It's got room into 233. Very simple. Very simple. But for some people, and even myself, I like to just look at a chart that doesn't have anything. But when I need to actually see, you know, where potentially these moves can head to, and, you know, am I missing something here? I will definitely pull up the bigger chart and take a look. Definitely. Definitely. Right now we got that big pop. We've got a little bit of a pullback, a little bit of a flag pattern being created here. So until we lose the lows, right, of this recent 5-minute demand, there is no short position. You can see here getting back from demand, getting back out of it, consolidating. Our next resistance is going to be 227.43 on Tesla. It would need to get over 227.43, and then it would need to, you know, back test that, confirm it for a continuation long. Again, I'm just hanging out here, just chart watching. If anyone has any questions on any ticker symbols, drop them in the chat. Just going back and forth here between the Discord and the live stream. Nice push up here on Tesla. Again, looking for the 227.40s. Pulling up Amazon quickly here, still trading below the 20 and 200. Looking for resistance on Amazon at around 133.50s. Nothing here on Amazon yet for me. Apple pushing back up into its 200. So Apple's found a little bit of an intraday support, intraday demand, whatever you guys like to call it, doesn't really matter. In this zone here. And I actually drew out this trend line here last week. I want to see what this is matching up with. This trend line here, sitting at around 173.40s, 173.10s, somewhere in that area. So currently looking at Apple again for the new people that are joining the live stream. We're looking at Apple here. We're looking at the short-term 5-minute demand being met here. Again, stuck in a rock and a hard place. We do have the 20 SMA starting to curl up. We're trading below the 20. I would need to see us get over 174.60s, you know, really put in a high over that. Again, we're going to have some resistance in this area here. If I kind of look at why this is acting as resistance. This is going back to Thursday's highs as well as Friday's highs. So right now, Apple is a little bit of a long position, right, off this demand zone. If it starts taking out the 174.50s, I got to tell the guys in the room, the 174.50s, right, is confirming the 20 SMA. And then it's also has a little bit of room to stretch. Again, Apple, it's not going to move a whole of a hell lot, but you know, it's got maybe 50 cents in that move before it meets its next resistance level. So again, keep that in mind. But we will be met with a little bit of resistance here at around 174.60s. That's the 200. That's the only thing that's concerning about this long play. The better move would have been as we pulled into this demand zone to identify it and then taking the green candle coming out, taking out previous red. So that would have been at 8:30, almost an hour ago, at a price of around 174. That would have been the most ideal play. 20 SMA set up a play here at 174.38. So again, you know, trying to work for you right now, but a little bit of a tough spot. One thing I want to point out is anytime you're underneath levels of supply, it's very, very tough to go long because the moves can be short-winded, right? You have a lot of rejection spots. They move a hell of a lot slower, and you definitely have to be a little bit more careful on your position sizing. You don't want to be oversized. You know, you never want to assume that that's the end of the road, meaning, you know, that we're not going any lower, because the moment you start thinking that you're smarter than the market and that the market is oversold and you go long is when, you know, the market corrects you and it takes out and puts in a new low of day. But if anyone doesn't have any questions, I'm going to get going here, guys. I'm going to get back to the room over at Evolution Traders and see how the guys are doing, and start helping them out with any levels here as we start to come out of the New York lunch hour. But again, just wanted to pop on YouTube, do a quick live, go over some analysis, talk some, you know, sit in BS a little bit with you guys. But again, if you guys enjoyed this live stream, you guys want to get more of them, join Evolution Traders, become a lifetime member, or kind of just sit and hang around for you know, the random live streams that pop up here on YouTube. But again, make sure to like, comment, subscribe, and I'll see you guys on the next one.